तो कैमरा ऑन करूं? अब अच्छा तुम Good afternoon, everyone. Thank you for joining this webinar. In this webinar, we'll be talking about silver uh, commodity. We'll be also talking about gold and silver FOF, which we have. So before I start and talking about the products per se, let me first talk about the past few days events which has especially affected silver. And I'll keep my conversation in English so that more and more people can understand. So typically, everything was quite okay till Wednesday last week, right? Silver was doing well, and in India, the silver prices were typically, if I put a ballpark figure, at $1 premium over the LBMA rates. Now, LBMA is the international benchmark, and we all know that both gold and silver are affected by what is happening internationally, right? And when we are looking at domestic prices, we use typically LBMA a as a guiding light. Now, as I mentioned, dollar premium on example was around $48.5. This is per ounce, and we were at a premium of $1 over that rate, which is again a per ounce. Translates to around 20 till everything was normal till last Wednesday. We were around 1%, $1 premium over LBMA, and in INR terms, roughly around started sorts of getting very day. Now, what happened was that on last Thursday, which is on 9th of October, we started seeing a sudden physical silver scarcity, or rather, when we were talking to the bullion traders who supply silver metal for creation of new units, we realized that there is very low inventory in India. And also, there was no sorts of view on when inventory will be replenished by sourcing from international markets. We also saw that in global markets also there is a severe crunch in physical silver, what we are referring to as short squeeze also, right? And I think the demand of physical silver, because some of the central banks have started buying silver, we saw a significant rise in investments in silver ETFs, and per se we are seeing a industrial application of silver rising. And silver anyways, from a supply demand point of view, was in deficit in last 4 years. So I think all of these scenarios and events sorts of cumulated, and this issue was sorts of created, and we saw the spike in silver. Now, what has happened, right? Because of the lack of physical silver, while LBMA rates have moved up, the premium in domestic market has moved even more. and which is why in India the silver sorts of shot up much higher. For example, on 9th of in fact on 8th of October, the LBMA silver was roughly around $49 per ounce, and I'm talking about spot figure, and the silver spot in India was roughly around 150 to 153, right? 1.5 to 1.53 lakhs. Now on 10th of October, so we saw that event happening on 9th, that the physical silver is an issue, that became a big news. So on 10th, we saw LBMS silver only moving from 49 to 50.8 in dollar terms, whereas in domestic market, the silver moved from 1.5253 lakhs to 1.62 lakhs. Now, on Monday, which is 13th of October, this difference further sorts of expanded, and we saw silver in LBMA spot around 51. So 49 to 51, I'm talking about 13 over 8th of October, whereas domestic spot moved up to almost 170. So 1.7 lakh, whereas on 8th of October it was just 1.5 to 1.53 lakh. So the premium in dollar terms increased from $1 on 13th of October. It increased to $7.9 on 14th of October. It has reduced to $6.2 on 15th of October, but still significantly higher than what used to be. In INR terms, if I put it, on 7th of October, the premium was around 2,900. It shot up to almost 16,492 on 13th October. It moved further up to 22,566 on 14th of October and 17,688 on 15th of October. Now, what is happening is that because of lack of physical supply, because of the fact that there is no near-term confidence that supply will be replenished, right? Your spots were trading at significant premium, which I just mentioned. Now, what that results in, that even if till yesterday your LBMA was around 52.6, which is a good jump, right, in physical silver prices in last 1-2 months. Effectively in India, silver was trading at almost $58-59. So it means that had yesterday you invested in physical silver or bought ETF at the price which they are trading at, you would have ideally purchased, if I draw a parallel with international prices, around $58-59, and at times around $60, which means that you are entering at a very high premium, which corresponds or results in a very high acquisition price of around $58 to $60. It means that even if in international market silver moves from let's say $52 to even $65, right? A huge jump. But in India, the premium goes away. Your acquisition price, which is around $59-60 currently, and it will only result in somewhere around 10% of gain. So such a huge jump from 52, 53 to $65 in international market. If premium compresses, then your returns will be much lower than expectation. And does it make sense to invest in silver at such a high premium, take such a high risk, and only sorts of get returns of, let's say, 10% plus, even when silver has moved to $65 or so. So That is what happened till yesterday. Now the situation is very volatile, right? Because what is also happening is that, right, there are funds, there are people who are holding silver ETF in their books, and when they are seeing this high premium, where you are effectively selling the international markets, you are making good money, right? Because the premiums are high. Now, what that is also resulting today, which when I'm talking on 16th of October around started to go down, right? Today I just checked premium in dollar terms, which I just mentioned was around $8 on 14th of October, around 6 based on live prices, it's in the range of 3.5 to $4. So premium has gone down. In INR terms, when it was 22,500 on 14th of October, when it was 17,600 on 15th of October, based on live prices, it is around $10,600. So premium has gone down because of selling which is happening on the exchange. And see what can also happen is that because of selling, uh, while international supply does not come in domestic market, there might be a scenario that because of selling itself, some inventory replenishment takes place. But even at this figure, when LBMS silver is somewhere around 50 to 53, let's take 53 as an example, and add today's live premium, which is around 3.5 to 4. Let's take 4 as a premium, $4. You are still buying silver even when premium has compressed today a bit at $57, right? Effectively, which is significantly higher. So you're still purchasing silver at a premium in INR terms around 10,600 when we are comparing with the international spot prices. So what should we do? Now, there are two products which I'll talk about. First is silver ETF. I think on the silver ETF side, one should not enter at these levels because of the high premium which you are still paying if you are trying to acquire silver ETF at the current prices. But having said that, if you believe that silver will shoot up very quickly to $65 and this premium supply deficit will remain and in India premium will continue, you can take that tactical call, but it will be a risky call. Our suggestion right now is that do not buy silver at such high premiums. You have to monitor the ETF market and physical silver market. If tomorrow the silver uh, price in spot, in Indian spot goes down, if we are seeing that premiums are roughly back to levels which they were earlier, around $1 to $2 or so in INR terms, around 3,000, 4,000 rupees, and you are bullish on silver like we are, you can then sorts of decide to enter and buy some silver ETF. If you have reasonably higher current scenario to book some profit from a silver, we think take silver to higher prices, but current premium, decent risk reward scenario for us to do investment in silver currently. there is a drawdown in silver prices, right? Silver has go ahead and suggest you to buy silver. At current scenario, we will avoid it for now. But like I mentioned, the situation is so fluid that possibly you may get scenarios or intraday trading levels where silver premium has compressed quite a lot. So keep tracking the market, keep looking at it. Like I mentioned, that from 7th October till 16th of October, which is hardly 10 days, the premium has moved up from 2,900 rupees to 8,000 to 9,500 to 22,500, and now has dropped down to 10,700. So take an informed call. If you are taking a long-term view, don't buy at these levels when premium is built into the prices. If you are taking a tactical call, you have to be very sure that you are bit more confident that silver will shoot up, premium will remain, and your call will be beneficial to you. Now, that was on silver ETF. So we have Mirae Asset Gold Silver Passive Fund of Fund. This fund of fund was launched by us just 1.5 months back. This fund can allocate in gold and silver ETF in any proportion. So we have a leeway to take dynamic call to invest up to any percentage in gold ETF or in silver ETF based on market dynamics, our view on gold and silver commodities, and any macroeconomic or geopolitical factors affecting these commodities. When we started investments in this fund, our allocation was roughly around 55% in silver and 45% in gold, because our view was more stronger in silver price rise, and that has sorts of played out well. Since we are allowed to have dynamic allocation based on current scenario, our fresh investments in this fund of fund is only happening in gold ETF, because of which our current allocation is roughly around 60% in gold and 40% in silver. While our long-term view on silver remains positive based on current silver spot quotation, when quotes are basically including very high premium, we are not buying silver ETF currently. In future, if premium compresses or there is a significant correction in silver prices, we may resume purchase of silver ETF. We continue to remain bullish on gold, which has in a way aided us and supported the fact of our tilt towards gold now. Gold continues to make all-time highs. When we look internationally also, interest rate cuts in US, economic shutdown in US, rising tariff war between US and China, and other geopolitical issues and central bank buying has made our view on gold a bit more positive. And current scenario has propelled us further to buy gold and avoid silver as of now. The Mirae Asset Gold Silver Passive Fund of Fund is hence a very powerful product where we can take these dynamic calls based on current market conditions, and which is why we are not closing this product. As per situation, we will tilt towards gold or towards silver or have a balanced allocation. So while earlier we were tilted towards silver from an allocation point of view, as of now we are allocating towards gold and will continue to do so till situation normalizes or we find attractive opportunities in silver. Last few days have, in a way, favored the construct of this product, where we have leeway to shift our allocation. Like I was talking earlier, on 16th of October, we have already started seeing premium compression in silver ETFs and physical silver market. If it continues, or if there is a correction in silver prices, we will take those tactical calls for the benefit of the investor. For this Diwali, you can use Mirae Asset Gold Silver Passive Fund of Fund for your fresh investments. Now that's all from my side, and I'll be taking few questions to remove any doubt about silver commodity, gold commodity, or silver ETF or Mirae Asset Gold Silver Passive Fund of Funds. So if you have any questions, please post them in the chat box. So there is a question from Dinesh Bansal. The question is, what will be the maximum exposure in gold or silver in Mirae Asset Gold Silver Passive Fund of Fund? Now, from a design point of view and based on the scheme information document, we can have any allocation in gold ETF or silver ETF. The mandate is that we need to have minimum in gold ETF and silver ETF to the extent of 95%. So the condition is together. So I can have in this fund 90% plus or more than that allocation in gold ETF or silver ETF if the situation demands. In most of the scenarios, such extreme allocation won't happen, but we are living in days where we are seeing such movements in silver and gold for the first time in history. So product is designed and capable to react and act based on current market scenarios and dynamics, but we are allowed to take any allocation in gold or silver ETF. As of now, our allocation is roughly around 60% towards gold and 40% towards silver. There's one question by Darshak Modi, and I think that is also very important. He's asking where to check current premium. I think, Darshak, this gets a bit technical. So what you can do is you can look for international spot rates, which is typically we use LBMS spot rates. You convert that into INR, you add the custom duty to it, and you will get spot rates in India based on international prices. Now you compare that figure with the MCX spot prices, you will get what premium currently exists in Indian domestic market. So there is one question by Karthik who is asking, I'm running a SIP on gold silver passive ETF fund of fund. Am I investing at premium and should I put a hold on this SIP? So the fund of fund valuation happens based on the closing price of silver ETF and gold ETF on the stock exchange. Now, since silver was quoting at a premium, the valuation will reflect the premium which was inbuilt in the silver ETF. So your acquisition price for silver for the Mirae Asset gold and silver passive fund of fund will be a bit higher. But if you have a long-term view where we are also bullish on silver and gold as well, that shouldn't concern much. But if you have a short-term view, or if you have invested for a very short-term horizon, then the compression in silver ETF premium or physical silver will impact the NAV of the Mirae Asset gold silver passive fund of fund. There's one question on the person has not given his name, but he's asking, do you think we should keep buying a fixed amount of gold for next 6 to 12 months, or would you advise lump sum investment right away in gold? I think the fact that both commodities, gold and silver, has run up so sharply, doing an SIP or a staggered investment will be a better investment option rather than doing a lump sum investment. So one person is asking, so there's someone who has not given his name, and I think Ankit's question is also similar. Should we book profit in silver? Is there any upside further as per trends? So that depends upon your investment horizon. Like I mentioned that internationally silver is around 52, 53. In India, currently on 16th of October, we are seeing a $4 premium, which means that in India, silver is roughly around 56, $57, which was around $58 to $60 yesterday. So if you have a short-term view, and if you have invested tactically, or if you have over allocated, you can look booking some profits at these current levels when premium is high. So watch out, consider at what price physical silver is getting quoted in India, at what price ETF is getting quoted in India, and you can book some profit. But if your view is long term, we think that silver has more legs to go, and we see silver prices going further up. So while premium will come down, if not in 1 week, in 2 weeks, 3 weeks, whatever, it will come down. So the returns which LBMA spot will give based on current levels will be higher than what you will attain based on current spot prices in India. But I think still that will be meaningful. So if your investment horizon is long term, you can wait it out, then you can wait it out. I think silver has more legs to go. In fact, what I'll suggest is that if there is a correction in silver, a meaningful correction in silver, you can add on silver. But if your view is short term, or if you have over allocated in silver, then you can look booking some profit at current levels and re-enter again when silver prices have corrected more. So some people are asking targets on silver. What is our view on silver? So I think from a long-term point of view, medium to long-term, we are bullish on silver. I think silver prices will move up, uh, and there's a reasonable room to go in silver price movement. But I expect corrections also, a drawdown also in silver to happen because of the pace at which silver moved up from $30 plus to now $52, $53. So there will be some consolidation, some corrections. We're already seeing that happening in Indian markets. So you can use corrections to add on to silver, because we continue to remain bullish in silver, and I don't think that that current prices are the top of silver in the long term. So Manish Mehra is asking a very good question. In your gold silver fund of fund, looking at volatility, is it prudent to invest through SIP route, or lump sum investment is also okay? So Manish, if you are able to track market on a daily basis, if you are able to track the fact that at what premium silver is trading at, whether domestic premium has gone down, physical spot prices have gone down. If you are able to track that very well, then I think a lump sum investment based on the fact that when premium compression is in your favor will be a better idea to do right now. Otherwise, you can opt for SIP from a long term point of view, not from a short term point of view. And Nupur's question was also same on SIP. So like I mentioned that you can do the SIP, but from a long-term point of view, from a short-term point of view, premium compression can create some negative experiences. So avoid short-term SIP investments, and for long-term things should be okay. There is question on gold by Rishika Sachan. Do you think gold is also looking a bit pricey right now, or are there still sweet spots to jump in? Any thought on whether it is a good time to add exposure? So, Rishika, we see gold going up further. We continue to remain bullish on gold, and we are more bullish on gold because we feel that whenever correction happens and whenever consolidation happens, gold, because of central bank buying, etc., has a more sturdy nature right now compared to silver. For example, drawdowns on silver can be more sharp compared to gold. So I think you can look at adding gold in your portfolio based on any corrections. If you see any corrections happening, you can look at adding gold in your portfolio. But lot of run up has already happened. Please keep your expectations muted. For example, even if at current levels, gold moved to, let's say, $5,000, that's only 25% move right now, right? So keep your expectations muted. What has happened in last 1-2 years is a bit more exuberant in terms of return. So keep your expectation muted. And also watch out your asset allocation. If whether you are going or investing too much on silver or gold, focus on asset allocation. So there are multiple questions again coming. Can this fund go 100% on gold or silver, or there is some minimum percentage to be retained in both precious metal? This question is from Jaswinder. So again, Mirae Asset Gold Silver Passive Fund of Fund manages allocation in gold and silver ETF in a dynamic manner. So we don't have any rule because of which we have to have a minimum allocation in any of the gold or silver ETF. So it's not as if that I have to maintain a 10% or a 20% exposure in either gold or in either silver ETF. We can have a 90% plus or more exposure in gold or silver ETF. The fact that we can take these calls, we can allocate, have allocation which is very balanced or very highly tilted towards a particular commodity, gives us the freedom to take calls which is best for the investors based on current market dynamics and our view on both the commodities. So Milind Prabhu is asking, is it the right time to book profit in gold and silver ETF fund of fund? So I checked NAV, I think day before yesterday. So we launched this fund around 1.5 months back at 10 NAV, and it's already, I think, 13.5, which is a reasonable return. So while silver prices have corrected since yesterday, but I think even now the returns are decent. So if you have any other place to invest in, or if you have other motives, I think you can, there's no harm in booking some profit at these levels and entering again. Having said that, like I mentioned multiple times, our view on gold and silver both is positive. We are investing in gold because the premium at which silver ETF is currently trading at, but our view on both the commodities remains positive. So there's one question by Deepak Gupta, and he's asking, considering strong volatility in silver, is it not too risky to put money in silver at this point of time when silver is peaking in prices? So Deepak, what we are doing, like I mentioned, that incremental money we are deploying only in gold ETF. So we are not deploying in silver ETF because of high premium. If premium was not higher, it was not, let's say, $4 to $8 more than what international spot prices are, I think even at these levels, I would have allocated money in silver ETF, because like I mentioned that we continue to remain bullish on silver. We see more price appreciation from a long-term point of view, and silver is also a very tactical commodity. You wait for drawdowns and you invest more, and unlike gold, which is a bit more sturdy, which is where you can have, let's say, an allocation to provide a more risk-averse nature to the product. So I think silver is a bit more tactical, but if premium was not there, I think we would have still allocated a bit more to silver ETF. So there are a lot of questions on doing lump sum or SIP in this fund of fund. I'll say again that if you are able to track the market on a daily basis, if you are able to judge whether premium has gone down, if the silver has corrected and got back to normal, then you can do lump sum. I think doing that will be beneficial, right? If you can't do that, do SIP from a long-term point of view, not from a short-term point of view. Again, there's a question from Manish who is asking, as inventory of silver shortage in the market, then how you generate units in gold, silver, fund of fund, or how are you managing? Will you suggest to invest in this fund? Like I mentioned, Manish, we are doing incremental investments in gold ETF. We have a bullish view on gold also, and gold is not seeing a very high premium to what has been historically. So I think it makes more sense to invest in gold currently rather than eat silver at such high price levels and premium. So there's one question from a person who has not given his name. What is the taxation on gold and silver passive scheme? So short term is as per your tax slab, long term is 12 and a half, and the period is for long term capital gains to come in is for more than 2 years holding. There's one question by Carl Guzdar. Do you expect gold and silver and gold to consolidate for next few years and then boom again? I think, thank you for that question. So I expect consolidation to happen in both gold and silver a bit. Anything, any asset class which has run up so much, the consolidation is bound to happen. And like you said that we expect both gold and silver to move up from here. So there are 100 plus questions. So I'll be just going through couple of them. Try to sort of club multiple questions so that I'm able to answer most of the queries. If I'm not able to take your question specifically, please reach us out through social media handles, and be happy to answer you there. So let me just go through and see. I've already answered about allocations and the fact that uh, uh, what is our current allocation, at how much allocation the fund can take, which is it can go to any level in either of the ETFs based on market conditions and dynamics. So I won't be taking any question on that. I already talked about investments in both gold and silver. I've already talked about returns which has been generated. So there's one question by Sanjay Trase who is asking that I have nil exposure to silver. When should I take exposure and how much? So Sanjay, if you don't have any silver exposure as of now, I think you should wait a bit for either silver prices to correct or premium to go down in spot market and physical silver market, and then probably you can take a call for investment in silver from a long-term point of view. So there's one very good question. Again, a person has not written his name. Was asking that if I'm looking at XYZ ETF, the INAV is 169, current trading price is 158. Does this mean silver ETF in market is already at discount? So you have to be, and this is a great question, right? How do I, because different ETFs are trading at different levels. INAV, which is being declared, can be different. So how do I judge whether ETF is trading at a premium or a discount? That's a brilliant question, right? Because see, in last few days, situation has evolved uh, very quickly, right? I was mentioning the premium which have been there since 7th of October, and please you can go back to the video and see that. So on 7th, premium was around 2900 when I'm comparing domestic MCX spot with LBMA spot. It shot up to 8,000 on 9th of October, shot up to 16,500 on 13th, shot up to 22,500 on 14th, then got down to 17,600 on 15th, and now when I check the data prices an hour back, it was somewhere around 10,600. So premium is compressing, but premium is still there. Now each ETF has a different NAV, and that's because each ETF was issued at a different point in time. So what I'll suggest is uh, you look at, so typically whenever I do webinar, I say that check the INAV, check the trading price of ETF if it is around the same, trade in the ETF, right? But in current scenario, what I'll suggest is look at the NAV which was declared uh, yesterday for the ETF. So today what I'll do is if I want to trade in Mirae Asset Silver ETF, I'll look what NAV was declared by Mirae Asset yesterday, right? Let's say for the sake of convenience, let's say it was 200 rupees, right? And then what I'll do is I'll check, uh, okay, it was 200 rupees, which means, and I'll also check at what level MCX spot was declared yesterday, and what level LBMA closed yesterday. And then I'll compare all the three today and see whether if today there's no LBMA movement on the upside, but Mirae Asset from a NAV point of view is trading, let's say at 195, 190. Probably it means that there is some premium compression. You can also look at MCX spot, MCX future, because what is happening on the INAV, intraday NAV, and this is what we saw today, is that premium is being changed on a regular basis. So we collect the premium from bullion traders, and that premium has been changed today at multiple points in time. So INAV, if somebody is not changing the premium, may show an incorrect figure compared to what is happening in the market currently at live prices. So be a bit cautious about using INAV in silver ETF. I think apart from INAV, also look at what the last NAV which was declared by the AMC, how the LBMA has moved and how the domestic spot has moved. I know it is a lot, but such as the market scenario right now, that you need to look at all these figures before taking a call in buying or selling a silver ETF. There is one question by Krishna, which is best to invest right now, silver or gold? So as of now, I will say that gold ETF is better investment currently today. If silver uh, uh, premium would not have been there, I would have given some asset allocation in gold and silver. But because premium in silver is too high, I'll say that invest in gold if you want to pick one, and do it from a long-term point of view. And preferred way is look for corrections, do it in a staggered manner. Yeah, so I've taken most of the questions. If I have not missed your questions, like I said that there were more than 100 plus questions, please reach out to us through social media channels. We'll be happily taking as many questions as possible. So that's it from my side. Wish you all a very happy Diwali. And if you are investing in silver, ETF or Mirai Asset Gold Silver Passive Fund of Fund, take an informed call, understand the risk, and do it from a long-term point of view. Thank you all for joining this webinar. Hope you have a great day and weekend ahead. Goodbye.